Based on the historical data and forecast, Bitcoin demonstrates a strong upward trend. The recent RSI values have been fluctuating between 48.3 and 67.5, indicating a shift from neutral to potentially overbought territory. Considering the forecast prices consistently above $89,400 and the Bollinger Band showing expansion, I recommend a long position strategy. We will enter a long position at $89,400. The stop loss will be set just below the lower Bollinger Band at $76,500, providing a buffer against short-term volatility. The target price will be set at $94,600, aligning with the forecast high and offering a substantial return. To refine this strategy, we will incorporate RSI signals. If the RSI dips below 30, indicating an oversold condition, we will consider adding to our position at $76,500. Conversely, if the RSI reaches 80 or above, signaling an overbought condition, we will consider taking partial profits at $93,200. This layered approach, combining trend analysis, Bollinger Bands, and RSI signals, aims to maximize returns while mitigating risk. The core strategy remains a long position with an initial entry at $89,400, a stop loss at $76,500, and a primary target price of $94,600. Based on the historical data and forecast, Ethereum exhibits a volatile trend with periods of consolidation and upward movement. The RSI consistently remains below 53.3, indicating that the asset is not overbought. Given the current RSI of 39.4 and the forecast price, I recommend a long position. Entry price should be $1,620. The stop loss should be set at $1,570, just below the consistent support level, to mitigate potential losses. The initial target price will be $1,650, aligning with the forecast price for April 23, 2025, and the upper Bollinger Band. To optimize returns, I suggest a dynamic strategy. If the price reaches $1,650, we will move the stop loss to the entry price of $1,620 and set a new target price of $1,670. This strategy aims to capitalize on the upward momentum while protecting profits. If the price fails to reach $1,650 and shows signs of reversal, we will exit the position at the initial stop loss of $1,570. This portfolio combines RSI, Bollinger Bands, and forecast data to achieve high returns with controlled risk. Based on the historical data and forecast, XRP shows a slight upward trend with support at $2.02 and resistance at $2.45. The RSI fluctuates between 42.0 and 55.7, indicating periods of both oversold and overbought conditions. The Bollinger Bands suggest increased volatility, with the price frequently touching the upper and lower bands. Considering these factors, I propose a combined strategy leveraging RSI, Bollinger Bands, and support/resistance levels for optimal returns. My recommended strategy involves a long position when the RSI dips below 40, near the oversold level, and the price is close to the support level of $2.02. Specifically, enter a long position at $2.03. Set a stop-loss order at $1.98, just below the support level, to limit potential losses. The initial target price is $2.25, aligning with the upper Bollinger Band and a significant portion of the resistance level. If the price reaches $2.25, consider moving the stop-loss to break even at $2.03 to secure profits and potentially ride further upward momentum. This strategy aims to capitalize on short-term price fluctuations while mitigating risk through strategic stop-loss placement. Based on the historical data and forecast, BNB shows a clear upward trend. The price has been consistently rising over the past 2 weeks, breaking through the resistance level of $637. The forecast for the next week predicts further increases, reaching $643. Considering the RSI values, which have been fluctuating between 44 and 61, the asset is not currently in an oversold position, but there is room for further growth. Therefore, I recommend a long position with an entry price of $610. To manage risk, set a stop loss at $618, just above the recent support level. For the target price, aim for $635, aligning with the forecast and recent resistance levels. To enhance the strategy, we'll incorporate the Bollinger Bands. The price has been moving above the center band, indicating an upward momentum. The top band has been breached recently, suggesting a potential for continued upward movement. Therefore, a secondary target price of $643 can be considered based on the forecast. This combined strategy offers a balanced approach, capitalizing on the upward trend while incorporating risk management through stop-loss and target prices. The portfolio will be 60% long position with an entry price of $610, a stop-loss price of $618, and a target price of $635. The remaining 40% will be allocated to a long position with an entry price of $619, a stop-loss price of $618, and a target price of $643. Based on the historical data and forecast, Solana demonstrates a clear uptrend, consistently breaking through resistance levels and showing positive momentum in the forecast period. The RSI consistently stays below 80, indicating that the asset is not currently overbought. Considering the current RSI of 63.7 and the forecast prices, I propose a long position with an entry price of $141. We will set a stop loss at $132, just below the support level, to protect against a potential trend reversal. The initial target price will be $150, aligning with the forecast for April 29, 2025. To refine this strategy, we will incorporate the Bollinger Bands. The price has been trending above the upper band recently, suggesting continued bullish momentum. If the price breaks above $150, we will adjust the target price to $155. Conversely, if the price approaches the lower Bollinger Band, we will reevaluate the RSI and consider tightening the stop-loss to $135. This combined strategy leverages both momentum indicators and price action to maximize potential returns while minimizing risk. Based on the historical data and forecast, Dogecoin shows a mixed trend with recent upward momentum. The RSI indicates that the asset is currently not significantly oversold or overbought, fluctuating between 42 and 59. The Bollinger Bands suggest that the price has been trading within a relatively narrow range recently, but the forecast shows a potential breakout. Given these factors, I recommend a moderately bullish strategy focusing on short-term gains. We will initiate a long position at $0.164 with a stop-loss set at $0.154 to limit potential losses. The initial target price will be $0.172, aiming to capitalize on the predicted upward trend. To refine this strategy, we will incorporate RSI and Bollinger Band signals. If the RSI falls below 30, indicating an oversold condition, we will enter a long position at the prevailing price, setting a stop-loss at $0.168 and a target price at $0.186. Conversely, if the RSI exceeds 70, signaling an overbought scenario, we will avoid entering a position. If the price touches the upper Bollinger Band, we will consider a short position with a stop-loss at $0.175 and a target price at $0.16. This combined approach allows us to adapt to changing market conditions and maximize returns while managing risk effectively. Based on the historical data and forecast, Cardano shows a slight upward trend with periods of consolidation. The RSI fluctuates between 43 and 55, indicating neither strong overbought nor oversold conditions consistently. The Bollinger Bands have been narrowing recently, suggesting a period of low volatility. The forecast predicts a continued upward movement, though with some potential dips. Given this information, I propose a moderately bullish strategy focusing on capitalizing on short-term upward movements while managing risk. My recommended strategy is to enter a long position at $0.637. The stop-loss should be placed just below the lower Bollinger Band at $0.566 to protect against unexpected downturns. The initial target price is set at $0.649, aligning with the forecast high for April 29, 2025. If the price reaches $0.649, consider moving the stop-loss to break even to secure profits and allow for further upside potential. If the price fails to reach the target and shows signs of reversing, exit the position at $0.633. This strategy combines technical indicators and forecast data to achieve a balance between risk and reward, aiming for consistent, moderate gains. Based on the historical data and forecast, TRON exhibits a slight upward trend with price fluctuations within the 0.24 to 0.255 range. The RSI consistently hovers around 55 to 67, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show that the price is currently near the upper band, suggesting a potential for a pullback. Considering these factors, I propose a moderately bullish strategy. We will enter a long position at $0.249, placing a stop-loss order at $0.24 to protect against potential downside risks. The initial target price will be $0.254, aiming to capitalize on the forecasted upward movement. To refine this strategy, we will incorporate the RSI and Bollinger Bands indicators. If the RSI dips below 30, indicating an oversold condition, we will consider entering a long position at the prevailing price, setting a stop-loss at $0.23 and a target price at $0.245. Conversely, if the price touches the lower Bollinger Band, it may also signal an oversold condition, triggering a long entry at the band's price with a stop-loss at $0.23 and a target price at $0.245. This multifaceted approach, combining trend analysis, RSI signals, and Bollinger Band dynamics, aims to maximize returns while mitigating risk. Based on the historical data and forecast, Avalanche shows a clear upward trend. The price has consistently been bouncing off the support level of $19.8, and the forecast predicts continued growth, reaching $22.2 by April 29, 2025. The RSI is fluctuating but generally above 40, indicating moderate buying pressure. The Bollinger Bands have been widening, suggesting increased volatility and potential for price movement. Considering these factors, I recommend a long position strategy focusing on capitalizing on the upward trend and the predicted price increase. My strategy will be a combination of RSI and Bollinger Band signals. We will enter a long position when the RSI falls below 40, indicating an oversold condition. However, given the upward trend, we will only enter if the price is near the support level of $19.8. The entry price will be $19.8. The stop-loss will be set just below the lower Bollinger Band, around $15.9, to protect against unexpected downturns. The initial target price will be the resistance level of $24.7, offering a significant potential return. As the price approaches $24.7, we will adjust the stop-loss to protect profits and consider a second target price based on further technical analysis. This dynamic approach allows us to maximize returns while managing risk effectively. Based on the historical data and forecast, Chainlink shows an overall upward trend with some volatility. The RSI consistently fluctuates, but remains mostly within the 40 to 60 range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show that the price has been trending towards the upper band recently, suggesting bullish momentum. Considering these factors, I recommend a long position strategy. I suggest entering a long position at $13.3, coinciding with the first day of the forecast period. Place a stop-loss order at $12.6, just below the recent price consolidation level, to limit potential losses. Set a target price of $14.1, aligning with the recent high and providing a reasonable profit margin. To refine this strategy, we can incorporate RSI signals. If the price drops and the RSI falls below 20, oversold, consider entering a long position at that price with a stop-loss below the lower Bollinger Band and a target near the upper Bollinger Band. Conversely, if the RSI rises above 80, overbought, consider a short position. However, given the current upward trend and the price near the upper Bollinger Band, the primary strategy remains a long position at $13.3 with a stop-loss at $12.6 and a target price of $14.1. This approach balances trend following with reactive adjustments based on RSI and Bollinger Band signals for optimal returns. Based on the historical data and forecast, FLOKI shows a clear upward trend. The price has been consistently rising over the past 2 weeks, and the forecast for the next week predicts further gains. The RSI is currently above 40, indicating that the asset is not oversold. However, it hasn't reached the overbought level of 80, suggesting there's still room for growth. The Bollinger Bands are widening, which typically signifies increased volatility and potential price movement. Considering these factors, I recommend a long position. My strategy involves entering a long position at $0.000591. Given the upward trend and forecast, I'll set a target price of $0.000629, aiming for a profit. To manage risk, I'll place a stop-loss order at $0.000543, just below the recent low. This strategy combines trend analysis, RSI assessment, and Bollinger Bands expansion to maximize potential returns while minimizing losses. The position size should be adjusted based on your risk tolerance and capital allocation guidelines, but a moderate allocation is recommended given the volatility of the asset. Based on the historical data and forecast, Pepe shows an overall upward trend. The RSI consistently moves above 50, indicating bullish momentum, and the forecast prices predict continued growth. The support price of $0.00000790 provides a strong floor, while the resistance price of $0.00000960 suggests a potential ceiling. Considering the Bollinger Bands, the price has been oscillating within the bands, with recent movement towards the upper band. We will implement a combined strategy leveraging RSI, Bollinger Bands, and support/resistance levels. Our strategy involves a long position. We will enter a long position at $80.06. The stop loss will be set just below the support level at $0.00000780 to protect against potential downside risk. The initial target price will be the resistance level at $0.00000960. If the price reaches the resistance, we will move the stop loss to the entry price of $80.06 and set a new target price at $10.06. This strategy aims to capitalize on the bullish trend while mitigating risk through strategic stop loss placement and dynamic target adjustments. Based on the historical data and forecast, Stacks demonstrates a clear upward trend, particularly evident in the recent price surge and a consistently positive forecast for the next week. The RSI consistently climbing above 45, peaking at 71.6, suggests increasing bullish momentum. Considering the Bollinger Bands, the price has been bouncing between the bands, but recently trending towards the upper band, indicating bullish pressure. We will implement a combination of RSI and Bollinger Band strategies, with a focus on capitalizing on the upward trend. Our strategy involves a long position with an entry price of $0.702. Given the support price of $0.78, we will set a stop loss at $0.77 to protect against a potential pullback. The resistance price of $0.929 will serve as our initial target price, aiming for a profit of $0.227 per coin. However, given the strong forecast and recent upward momentum, we will also set a secondary target price of $0.833, based on the forecast data for April 29, 2025. This combined approach leverages both historical data and future projections to maximize potential returns while minimizing risk. Based on the historical data and forecast, Raydium shows a clear uptrend. The price has been consistently moving upwards, supported by the recent forecast prices ranging from $2.43 to $2.73. The RSI values have generally been increasing, indicating strengthening momentum. Furthermore, the price is nearing the support level of $2.28, which suggests a potential buying opportunity. Considering these factors, I recommend a long position strategy. We will enter a long position when the price reaches $2.43. The stop loss will be set at $2.35 to protect against potential downside risk. The initial target price will be $2.73, aligning with the forecast for April 29, 2025. To refine this strategy, we'll incorporate the Bollinger Bands. The price consistently trading above the Bollinger Bands center line confirms the uptrend. When the price dips towards the lower band, it presents a favorable entry point. Therefore, we will create a secondary strategy to buy when the price touches the bottom of the Bollinger Bands, which is currently at $2.39. The stop loss for this entry will be $2.3, and the target price will be $2.73. Combining both strategies, the most efficient portfolio will prioritize the long position at $2.43 with a stop loss at $2.35 and a target price of $2.73, while also considering a secondary entry at $2.39 with a stop loss at $2.3 and the same target price of $2.73. This combined approach maximizes potential gains while mitigating risk. Based on the historical data and forecast, Curve DAO shows a generally upward trend with some volatility. The RSI fluctuates between 55 and 66, indicating neither strong overbought nor oversold conditions currently. The Bollinger Bands have been widening recently, suggesting increased volatility and potential for price swings. The forecast for the next week predicts a continued upward trajectory, with prices ranging from $0.661 to $0.712. Considering these factors, I recommend a trend-following strategy with a focus on capitalizing on upward momentum. My proposed strategy involves entering a long position when the price touches the lower Bollinger Band and the RSI dips below 30. Currently, the lower Bollinger Band is around $0.406, and the RSI is above 30. However, anticipating potential dips, let's set an alert for a buy order at $0.411. The stop loss should be placed just below the lower Bollinger Band at $0.39 to limit potential losses. The initial target price is set at the resistance level of $0.788, offering a substantial profit margin. If the price reaches $0.788, consider taking partial profits and moving the stop loss to break even to protect gains. For the forecast period, if the price reaches $0.712, consider taking partial profits and moving the stop loss to break even to protect gains. This strategy combines Bollinger Bands for volatility assessment and RSI for confirming oversold conditions, aiming for high returns while managing risk effectively. Based on the historical data and forecast, Dogwifhat shows a volatile trend with periods of consolidation and upward movement. The RSI fluctuating between 38.8 and 60.5 indicates that the asset is neither deeply oversold nor overbought consistently. The Bollinger Bands have widened recently, suggesting increased volatility and potential price swings. Given the support price of $0.377 and the forecast prices trending upwards, I recommend a long position strategy. We will enter a long position at $0.431, placing a stop-loss order at $0.377 to limit potential losses. The initial target price will be $0.482, aligning with the forecast price and the upper Bollinger Band. To refine the strategy, we'll incorporate the RSI and Bollinger Band signals. If the RSI dips below 20, which it hasn't yet, it signals an oversold condition, and we could consider entering a long position. Conversely, if the RSI reaches 80, indicating an overbought condition, we would consider taking profits or tightening stop-loss orders. If the price touches the bottom of the Bollinger Bands, it suggests a potential buying opportunity, while touching the top indicates a potential selling point. Therefore, we will adjust our target price to $0.501 if the price breaks above $0.482 and maintains momentum. This combined strategy aims to capitalize on the upward trend while managing risk through defined stop-loss and target levels. Based on the historical data and forecast, Immutable shows a clear upward trend, especially with the recent surge to $0.556 and the forecast projecting further increases. The RSI consistently climbed above 37, indicating strengthening momentum, and the Bollinger Bands have been expanding, suggesting increased volatility and potential for price movement. Considering the support price of $0.55 and the forecast price of $0.477 on April 23, 2025, I recommend a long position entry at $0.477. A stop loss should be placed just below the support level at $0.54 to mitigate potential losses if the trend reverses. The initial target price should be set at $0.614, aligning with the resistance level. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI dips below 20, oversold, during the forecast period, a buy signal is generated. Conversely, if the RSI reaches 80, overbought, a sell signal is triggered. Additionally, if the price touches the lower Bollinger Band, it suggests a potential buying opportunity, while touching the upper Bollinger Band indicates a potential selling point. Combining these signals, I suggest adjusting the target price to $0.531 if the RSI reaches 80 before reaching the resistance level. This layered approach, with an entry at $0.477, a stop loss at $0.54, and a flexible target price of $0.614 or $0.531, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Sui shows a generally upward trend with recent volatility. The RSI fluctuating between 42.9 and 63.3 suggests periods of both oversold and overbought conditions. The Bollinger Bands indicate periods of contraction and expansion, reflecting the price volatility. The forecast for the next week predicts a continued upward movement, with prices ranging from $2.34 to $2.58. Considering these factors, I recommend a combined strategy leveraging RSI and Bollinger Bands to capitalize on short-term price swings while aligning with the overall upward trend. My strategy involves a long position with an entry price of $2.34, coinciding with the first forecast price and a slight dip below the recent price action. A stop loss will be placed at $2.28, just below the lower Bollinger Band, to mitigate potential losses if the price reverses. The initial target price is set at $2.58, matching the final forecast price and representing a significant gain. If the price reaches $2.58, we will reevaluate the situation and consider a partial profit-taking strategy, moving the stop loss to break even and setting a new target price closer to the resistance level of $2.79. This approach combines the momentum indicated by the upward forecast with the risk management provided by the Bollinger Bands and RSI, aiming for high returns while minimizing potential downside. Based on the historical data and forecast, Bonk shows a slight upward trend with increasing forecast prices. The RSI fluctuates between 44.3 and 65.5, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been narrowing recently, suggesting a potential breakout. Considering these factors, I recommend a long position strategy. We will enter the market at $0.0000134. The stop loss will be placed just below the support level at $0.0000139 to limit potential losses. The initial target price will be set at $0.0000152, aligning with the forecast price and a reasonable profit margin. To refine the strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI falls below 20, indicating an oversold condition, we will consider accumulating more positions at $0.0000134. Conversely, if the RSI reaches 80 or higher, suggesting an overbought condition, we will consider taking partial profits at $0.0000147. Furthermore, if the price breaks above the upper Bollinger Band, it signals a strong bullish momentum, prompting us to raise the target price to $0.0000152. This dynamic approach combines trend analysis, technical indicators, and risk management to maximize returns while minimizing potential downsides. Based on the historical data and forecast, Pudgy Penguins shows a clear upward trend with increasing momentum. The RSI consistently rising from 35.9 to 66.5 indicates strengthening buying pressure. The forecast for the next week projects further price increases, supported by the Bollinger Bands, which are widening, suggesting increased volatility and potential for price movement. We will implement a combined strategy leveraging RSI, Bollinger Bands, and support/resistance levels. The primary strategy will be a momentum-based long position. When the RSI dips below 30, we will enter a long position at $0.005, placing a stop-loss order at $0.004 to limit potential losses. The initial target price will be $0.00676, coinciding with the support level. To refine our approach, we will incorporate the Bollinger Bands. If the price touches the lower band, indicating a potential oversold condition, we will enter a long position at $0.005. The stop loss will be set at $0.004, and the first target will be $0.00676. If the price breaks above the upper band, signaling a potential overbought condition, we will hold the position and adjust the target price to $0.007, anticipating further upward movement. This blended strategy aims to capitalize on both momentum and volatility, offering a balanced approach to maximize returns while managing risk. This portfolio is expected to generate high returns.